Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on March the 10th, 2020 with a daily Forex market analysis and live trading market webinar for you. And we just want to put up our disclaimer real quickly for you to remind you that this webinar is for illustrative and educational purposes only. Now we have some crazy volatility going on in the Forex markets right now, and we have some signals also. We have some high probable Japanese candlestick patterns that are forming, and if you want to learn about these patterns after this video, you can check out the book High Probable Japanese Candlestick Patterns. It's available on Kindle and paperback version on Amazon.com, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself an edge against the markets. And now let's take a look at what we're talking about. So we're at the Forex-Trading-Unlocked.com website. We have the workstation page already pulled up, and we are just going to toggle down real quick. Numbers for the 10th actually are pretty much, let's see, we've got most of them done. We have little Australian numbers, but for the 11th we have a lot of UK numbers, and we have CPI and for the US, as well as we have for Japan, we have some numbers as well. So tomorrow we're going to have some things that could really rock the major currencies especially. So what's going on here? We have the Euro US dollar that obviously is coming back a little bit today. The market has been leaning on its lows and trading in the below the 50% part of its range today for most of the late morning as the U.S. markets have opened. They've come back a little bit off their lows right now, and they're finding a little bit of support, and I guess we're going to have to see what kind of a day we have that turns out today. The one thing that we have to take into consideration is the drastic up move we've had over the past couple sessions, especially with yesterday's gap opening higher and just exploding. So I mean, the high, we have this pivot of yesterday's high and the low from a couple sessions ago. These are our boundaries for a breakout, so which is pretty wide. Think about this: 110.94 to 114.94. That's a $4 range. The $4 range is what the euro had been in for actually been in like a $2 range, but it had been in a $3 range from October all the way into February, and we're talking about this was just in 1 week's time we've set these new pivots. So we have some serious volatility that has entered the markets. And as far as a correction right now, are we bearish? No. Are we bullish? Well, we've exceeded any upside targets that we were looking for before. So this coronavirus and stuff like that is definitely fueling some activity, especially with what's going on in Italy. We'll just have to see how this pans out for the European trading over the next couple sessions. But right now the bears are in control, and we have a little bit of a profit-taking move going on. That's what we have to look at this as, is it's a trend move higher. So far we are a bull, so today's lower session is nothing more than a little bit of a counter-trend correction, profit-taking move that we're looking for right now. So we have been making higher move highs and higher move lows, so the trend definitely, unless we fail from 110.94, this market is in an aggressive bullish posture, definitely neutral to higher posture moving forward. So now let's go to the British pound US dollar. Now this one has been interesting. Look at this. It had been trending lower with lower move lows and lower move highs for months on end, and then over the past week and a half had a nice correction, broke out through this downward sloping resistance line that had been keeping this trend intact. And now today, look at this. This market is just hammering support. So where this market had become very strong versus the dollar, like many of the other currencies, we are now looking at the pound finding weakness once again. So the question is this a profit-taking move that's going on, or is this the beginning of another turn towards support? Because this could be, we just came off a lower move low. This is a higher move high in the short run, but it didn't take out this one here. So, or it did, excuse me, just barely took out this one here. So what we have to look at this as, maybe in the grand scheme of things, this is just a bigger wave corrective higher move high, and then we're going to go back and hit the lows again. So we'll have to see how this goes. We have the coronavirus thing that is definitely exploding in Europe, And the EU, we'll have to see what goes on with the British pound and see how that gets stays in place over the next couple days and weeks. We know that Italy now is in complete lockdown. We have to see how the EU handles things, and that may be why we're starting to see weakness where these currencies had finally found strength against the dollar, while the dollar is strong versus many other currencies. And now all of a sudden with the outbreak in Europe, maybe this is going to be the fundamental that starts to take this down. So let's see how this goes here. We have this pivot here to $1.3206, and we have $1.2722. I mean, this is a wide range here. Right now, we don't have any signals in this market. We have something shaping up in the Euro US dollar, but we have to wait until the close. We don't have any real affirmative action here to take, because we don't want to get caught selling in the hole or buying in into a rally that's going to fail, you know, in any of these currency crosses right now. So we've had a crazy market action for a couple of weeks now, and especially just starting off this week. I mean, it's just absurd how this has gone. So, but we will see how this closes today and see if we are negative on the day. For all we know, this market should settle higher. Now, the US dollar Swiss, here's another one that, oh my God, did this market ever put on the brakes? So we have a potential bullish engulfing line forming here. We need a positive close above the opening of yesterday, and right now we're hovering just below it. So we'll see what happens with the close today. So we're looking for a potential buy signal that would not necessarily make this market a bull, but we are due for a little correction considering the volatility. I mean, we've had the biggest move in the Swiss franc than we've had in a while. It's taken months to get that kind of market action, and we've done it in just a period of 2.5 weeks. So let's see how today closes. We're also waiting for this to see if we get some sort of a, you know, a signal. We have to see. If it doesn't get above that one, let's see, the opening yesterday was 93.21.3. Okay, so we need a close above 93.21 to confirm a bullish engulfing signal here. So we'll see how this pans out. Right now, bulls are doing okay on the day, but as we said, no matter what, this could be just a profit-taking little slide, break right now, or pause, excuse me. This would be a rally, profit-taking rally that is going to fall apart, and we're going to be hitting these lows again. So our parameters, I mean, look at this. We have 98.54. Only above there does this market even remotely get bullish. Could we have a correction? Absolutely. With the sell-off, we could easily pop back up to 94, 95, even 96 cents. You know, so this is a big move from 98.54 to 91.80. You're looking at almost a $7 move in the period of, let's see, what was it, February 21st to March 9th. You're only looking at a period of, you know, 18 days, actually 17 days because it was February. So you're looking at 3 full trading weeks is what it was. But now here we are with this little potential signal forming today on this Tuesday. We'll see how it pans out. Right now the dollar is finding some support. Let's see how it's looking against some of the other currencies. So we see in Europe, and this is probably driven mostly because of the coronavirus, and then also you got to remember, you know, the oil trade that's going on right now. This is amazing what's going on. It should help to support a lot of numbers in the in economies around the world, but then this coronavirus seems to just be taking center stage right now. So since that's being sensationalized and that's driving the trade, let's see what's going on in the US dollar, Japanese yen. You want to talk about a market that has slammed the dollar, it would be the Japanese yen. I mean, all these markets took over and just like unraveled themselves against the yen. And now here we are with today. This market is a potential bullish engulfing line too, but we have to get above the open of yesterday, which is 104.18. So if we can close above that, which is going to take quite a move, well then we have the possibility of filling this. Well, we've already filled the gap. We'll see how we did that today. But if we settle above that opening from yesterday, then we have a good chance of potentially having a nice little corrective higher move that will get us probably back towards this 106, 107 handle. We have to wait for the signal before we start to come up with any potential targets. We don't want to put the cart before the horse, so to speak, because for all we know is you could get long into the, try and get in front of this signal, get long here, and the market settles all the way back on its lows again today, and then you're in a world of hurt. So this is going to be quite a wide trade to begin with, because this signal, if it does get triggered, you're looking at a risk point of, this is where you have to have very good money management skills and the pockets to be rational with what you're doing here, because with this volatility, a large position, think about what would happen to you just with yesterday. You'd be blowing out margin calls no matter what with the way yesterday opened up. You had $2 moves in the euro. Look at what happened in the yen to begin with right off the bat. So if you're trading the right size for your accounts, even still, your risk reward here, you're going to look at, let's say we settle right at that point. Let's see, 104.18. So let's say you're 104.20. So 104.20 down to 101.17. You're looking at a $3 risk just for this trade. Now, what's your potential upside? Well, if we do settle up here, let's see, 104.20, and then we have that, let's see, that would be from 2, that would put us up to this 109, 110 area actually for a corrective move higher. So your reward to risk ratio is probably in a pretty fair and good place for that trade, should we get the signal later on today. But buying it, and the thing is, that is a high buy. You know, everyone would like to buy it lower here, but then you don't. What if we don't get the confirmation of the signal? Then that means that most likely we'll be banging support, and you'll be buying into highs before the next wave lower, and you don't want to do that. Another reason why you want to pay attention to what Teddy's saying about this volatility. Let's look at the Australian dollar, US dollar here. The Australian dollar, US dollar, look at the range that had yesterday, just banging new lows after having this nice corrective move higher shaping up. It just fell apart. I mean, the volatility here yesterday, look at this, 66.88 down to 63.14. These are our breakout pivots right now, folks. Anything in between here, we don't know where this thing is going. It's just going sideways. Anything lower, obviously, is weaker. But with this kind of volatility, I mean, there was more volatility. Let's see, this is a over $3.50 move. So let's just see from this low right here before 64.30. So that would put it at 67, 68. So 68, this was back up over here. But look at how long it took. It took over a month to get that kind of a break, and now here, boom, this did it all in one single day. It's absolutely crazy how that is. Absolutely crazy. So this volatility you have to be mindful of. You really have to pick a signal. This one isn't setting up for anything. This one, who knows what's going on with this one. I'd be very leery of this trade for sure. If anything, it's probably looking to sell into rallies. And look what we did. I mean, we've set a lower move high and a lower move low in one day. And if that's the case, that means probably that you can be a seller against this 66.88, especially after any negative action today. So now let's look at the New Zealand dollar, US dollar, and see if this confirms the lower trading, which is also weakness versus the dollar. This has done the same thing. Look at the trade yesterday. Talk about a market that blew out every long and short that was in the market going into the weekend. No matter what, you had to have gotten smoked on most traders. They had to have gotten blown out. I can't imagine who sustained this volatility yesterday, unless they didn't have stops, and they definitely have to have major money at risk and have a very, very deep account. So, which is not a way to trade. That's an appetite for destruction. So here we're looking for a move. Who knows how long it's going to take to figure this set up. But right now we have the lower move highs and lower move low already set, and now I guess we're looking to make a lower move high once again. We'll see how this happens. The volatility is just absurd. So as you get into these lesser currency crosses, folks, you definitely have to really wait for your moments, or otherwise I would say right now, stay away right now and wait until we really have something that calms the markets down and the fears of this coronavirus turn around, because as we are going right now, this is just a terrible trade for anybody to even try and figure out how to make any money. So now, speaking of a trade where you want to make some money, or at least save some money, you can go down to Mexico for your vacation, especially all these kids on spring break going on this week and next week. Look at the peso. It was down here at 18.5 pesos to the dollar just 3 weeks ago. Yesterday, it spiked up at 22 pesos to the dollar. That hasn't been up there in 3 years, not to mention the fact that it hasn't had a move like this in God knows when. So in 3 weeks, this peso has exploded, and especially in the past week and a half, making higher move highs, higher move lows, higher. I mean, the volatility just yesterday alone. Look at it. The low yesterday was what? The low was 20 peso, 2010 pesos, and the high was 2206. So 2 full pesos of a 2 full peso move range yesterday. It's absolutely crazy how that moved yesterday. So here's another reason why volatility. You just instead of putting trades in the market, subscribe to our YouTube channel here at YouTube/Forex Trading Unlocked. That's what you should do. That would be more. That would probably be better for your time spent than trying to focus on finding any trade in the U.S. dollar, Mexican peso. Now we'll go to the far north in North America and see how the U.S. dollar, Canadian dollar is shaping up. Now this market, talk about a bull. This thing exploded higher yesterday. It looked like it wanted to collapse today, but it's going higher and higher and higher. So the U.S. dollar somehow is finding strength in a very, very, very big way right now. So is this going to continue? Well, I don't know. It's hard to leave a gap like this behind, but then with what's going on right now, this may be the true indication as to how things are going in the marketplace, and we're just going to have to absorb this current trend until, like I said, we have some reason to think of stability in the marketplace. When we have stability in the marketplace, then I think we will have these currency moves that start to settle down, because I'll tell you what, we have not had currency trends and moves like we've had now. I mean, look at here we are starting out 2020. The US dollar has rallied versus the Canada, and it was coming into kind of a wedging consolidation period, and then just in 2 days we've had more market action. The market was at just above $1.34. Right now it's trading just below $1.37, the high of $1.37.63. That's a tremendous move all within 2 days. So this volatility is absolutely crazy. So we have to be mindful of it. And I'll tell you what, if you're long, ride it out. Obviously, you're going to have to keep your stops in a wide parameter. You can see that there is, I mean, today's range, look at this. It opened up, and the low today is $1.3609. The high is $1.3754, and the markets are actually relatively quiet. So that just tells you what kind of volatility we're looking at. So we do have some buy and sell signals. We have the potential trade in the US dollar yen. But before we go back to our signals to close out this webinar, let's look at the Turkish lira. The US dollar Turkish lira, this thing has been just a monstrous bull for quite some time and has had incredible volatility. Ironically, with the way the dollar has been with the other markets over the last 2 days, the Turkish lira actually has been relatively quiet. Now, it's been still busy for this currency cross, but it definitely hasn't been like some of these other currencies, like we looked at the peso, or even like the yen, or the Australian dollar and the New Zealand dollar, which are some pretty big currencies versus the dollar. But this one seems to have steadied a little bit. Very unique. So a tough market to trade. You need deep pockets and be very experienced to trade this market for sure. So but with this one, we don't have any trade setups either. We're just going to say here's our pivot. Any failure at 6028 right here. This would confirm newer move lows and confirm a bearish trend and dollar weakness. But we're looking more for a challenge of the 625.9 area. But you got to definitely be a very experienced Forex trader before you even start to look at this. There's a lot of potential, but the spreads getting in and out are very, very wide. So you have to be very mindful of your risk and have those kinds of pockets and know what you're doing. You have to really establish a long-term position to be able to make any real true profiting. Now, unless you're hedging something for business, that's a whole different story. But for outright trading, be very, very careful with this one. So let's look at our last couple signals to close out this webinar. Remember, we have the US dollar JPY. We have a potential bullish engulfing line buy signal forming here. So we're going to see what happens. We're going to see if this emerges. We have to wait until the close of the session today. Do not try and jump in front of this. I will warn you that if you do, It happens time and time again where people try and they see a signal forming up, they try and front run their own signal before it occurs. It doesn't occur, and then all of a sudden, what are you in? You're in a trade that you should never have been in. Always have a plan, always trade a signal, know what you're doing, don't just go jumping in for no reason. Doesn't make sense, and you will lose money over time doing it. So wait, we'll find out later on today if we have a buy signal in the US dollar Japanese yen. So now as far as trades, just to let you know, we do have, we are long the Swiss and short the Euro US dollar already. As you can see, we'd entered these trades yesterday and earlier today. These were for other reasons. These weren't for the potential signals that are shaping up right now. As well as we've also put on the Nadex options. We also have this. We already have bought the US dollar Swiss greater than 93.25 strike price, so we are long this option right now, and we are also short the $1.14 Euro US dollar. Now this wasn't because of the buy and sell signals from the candlestick patterns. These are for other reasons why we're already in these trades. We will be adding to these trades later. So we are looking for a buy signal here to add to our trades that we already have on, and then we have the US dollar Swiss, which is also forming a bullish engulfing line buy signal. If this does get completed, we will be adding to our positions. So the positions we already have on, we were already in from lower. I do not ever suggest you chasing trades. Please do not do that. We are already, if you're not in the signal, if you don't get one of our signals and they're triggered when they're triggered, do not try and chase these trades. So definitely wait for confirmation with these signals. Right now, the US dollar Swiss is working our way, but you don't know. We still have all day to go. So we'll have to see what happens with that. So don't rush it, but we do have this one forming. And then we also have in the Euro US dollar, let's see what we have going on here. This is not a bearish engulfing line, but we do have a potential sell signal here, so we will have to wait and see how this forms. We'll see what happens after the close today, and then we will know. So we have the Japanese yen, we have the Swiss franc, and we have the euro, where we have potential trading setups going on. And then if we do get those confirmations, then we will have trades with risk levels and target levels for you to work with, and you will be able to see what is going on. So please subscribe to our channel if you haven't done so already, because that way you will know when our next video is. And if you want to learn how to trade these high probable Japanese candlestick patterns, buy the book or buy the Kindle on Amazon and utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And with that, we're going to say thank you very much, and we will see you later. Take care.